Good morning and welcome back to the Share Series. I'm Dan Aldridge, founder of the Share Series and managing partner of Asbury Investor Relations. And with me this morning, I have the pleasure of speaking with VP of Investor Relations at Vital Farms, Matt Siler. So before we get started, just again wanted to remind everybody about the question feature on the top of the video player on the right. Please use that to submit questions throughout the session, and we'll get to those at the end. So with that, why don't we get started? Matt?
Good morning. How you doing, Dan? Thanks for having us again. Good to be here at another Share event.
So why don't we get started with just kind of an overview, right, of Vital Farms, the high-level sales pitch. As you know, a lot of people are new to the story and the company.
Yep, sure, no problem. I guess I should start by saying for all the retail investors out there, we are Vital Farms. We are on, our ticker is VITL, so you can find us out there in the market. Look, I'm happy to be here again to do another event with Dan. Did one last year. It was great. But a little bit about Vital Farms. Vital Farms is an ethical food company that's the leading U.S. brand of pasture-raised eggs. And we're the second largest brand of eggs in the U.S. by retail dollar sales at the end of 2022. We've been public since about August of 2020. And as a company, we've had a 37% net revenue CAGR since about 2014. Our eggs are a premium product. You can find it at your grocery stores and you can find them online. Our mission is to bring ethically produced food to the table. We believe three things set us apart from other competition. And that is one, our best in class relationship with our farmers. Two, our marketing prowess and brand building capability. And three, our people who we refer to internally as our crew. Today, we work with about over 300 family farms who share our commitment to the humane treatment of animals and sustainable agricultural practices. Our company is a little bit different than some others. We're built on a stakeholder model, right? And our flywheel is driven by what we do for each of our stakeholders. The stakeholders include our farmers and suppliers, our customers and our consumers, our crew members, our vendors, our stockholders, such as some of you may be in the room, and the community, animals, and the environment. Part of our, commitment to our strategy and the way we operate is to do our things our way. Not always the cheapest way. It's not always the fastest way. We know many other competitors simply just never choose to do business the way that we do, weighing the benefits of kind of what each decision means to each stakeholder that I previously mentioned. But again, the most important thing of our company is our farmer network and how we treat them, right? We do well and we're not overpaying for eggs. We're fair, which we normally have not seen historically from farmers. We work with them, which contrasts to kind of the traditional industrial system of each farmer only being paid on their own production, competing with the other farmers, even within the same company. We support our farmers internally. We have a grower support team that visit the farms often, and they're working to improve their outcomes, and we share best practices and knowledges across our farmer base. We have the farms audited independently, so we're on the same side of the table during that audit. We've experienced minimal attrition to our farmer network over the past 5 years because of how we treat the farmers. What's important to the company and the key to the company is our brand, the brand that we built and the brand that some of you may already be familiar with. We built this brand based on trust and doing things the right way. Our consumers demand this from us and they pay a premium price because we make many decisions that align with their values along the way. We've built brand equity through these actions and our unique kind of savvy marketing touch points that we refer to as keeping it bullshit free, which is the core of many of our advertising messages you might have seen. Consumers are attracted to our brand and stay with us because we connect with them, building lasting relationships by kind of calling like we see it and being open and honest about everything. Our values are truly lived by those people that work here, and we fostered a level of accountability internally because of those values. Our culture does not allow jerks. We focus on A players who believe in our values and work to make the company unique and keep it that way. It's not fancy, it's somewhat nuanced, but it's what sets us apart. Our moat is the 100 decisions we make each day to ensure all stakeholder outcomes are positive. This way of operating has allowed us to continue to build and maintain the trust of consumers across the United States and continue to build our brand. We believe this strategy will provide robust returns over time, and we feel like we've demonstrated that since we've been public. Some of the latest examples you can see in some of our filings, but look, we've done this through COVID, through inflation, and through any other macro challenges that you've seen, many of which have been in the past couple of years. So just some statistics quickly to wrap up. Our revenue grew almost 40% last year to $362 million, and our adjusted EBITDA basically doubled to over $16 million. We grew our volumes about 27% last year, well ahead of the conventional egg market, which kind of declined about 1%. We did this all while taking a low double-digit price increase. As we look ahead to the rest of 2023, we provided guidance for 25% net revenue growth to over $450 million, and we expect our adjusted EBITDA will be at least $30 million. Additionally, we guided for CapEx in the range of $25 to $30 million bucks. And I'll stop there.
Okay, perfect. Thanks, Matt. So a lot of good information, and love the mission statement of the no bullshit. Let's start really with the macro, right, and inflation, right? One of the most lines of inflation is food prices, and it's been eggs, right, have been on consumers' minds. So can you talk a little bit about what's going on there, what's actually happened, and what has Vital Farms done, to mitigate that, for the consumer?
Right. Yeah, I never thought when I came here that we'd be dealing with egg memes and the prices of egg memes and everything out there in society, but here we are. So how do we get here? Basically, you had some general inflation, which you saw throughout much of the food chain over the last couple of years. That's played a role in some of it, right? The prices of inputs have gone up. But eggs specifically, it's a little bit more complicated. We've seen avian influenza impact the number of hens that can actually produce eggs here in the US. So when these laying hens are taken out of the flock, you turn into a supply and demand issue, right? Fewer eggs are produced that can be sold and that can be consumed. The demand doesn't necessarily change, right? People still want to eat eggs. People still want to bake. So you've seen that avian influenza impact really hit prices to the upside, right? Because supply has gone down over the last few quarters. If you think about where are we going from here, right? So that happened a lot in Q3. It significantly impacted Q4, right? Where demand was high and supply was low. So prices were as high as they've been in, 30, 40 years. Historically, if you look at when these cycles occur, the last time there was avian influenza was in 2016. And so there was a shortage of supply throughout the industry, as we've seen over the last 6 to 8 months. Then there was a little bit of a supply boom, right? So as any commodity, you'll see over time, if we start to run out of it, more farmers will produce it, et cetera. And then it corrects itself in kind of economics 101. So last time there was an oversupply, and we saw the prices of eggs go down significantly. So I'm not sure exactly how it will play out again this time, right? I think we have seen some of the birds return to the flock in recent months, but it's something that will likely be corrected, by the spring of this year, early summer. So think like, June. What we found last time when the supply came back is it really didn't affect our growth rate. Because of where we're priced at a premium. We're kind of well above some of the areas within eggs that have seen the significant price increases, right? We've been at a premium to them. Our, spread to those eggs has lessened in recent months, but for the most part, we have been focused on a consumer that's, focused on selecting an egg or a product like ours that's at the high end of the market versus others because they're attracted to our brand, because they're attracted to the way we do things, because of how we treat the animals. So it's that flywheel I mentioned earlier in terms of what we're doing attracts people to the brand and keeps them there, regardless of what prices are doing at the lower end. Like I talked about just a moment ago with our guidance to 2023, as a result of the dynamics in play that we just discussed, right? The supply situation likely gets somewhat corrected by the time we get into the summer. We think the broader market will have an impact potentially on our growth rates in the second half of the year. So we have guided to the first half being stronger than the second half. And for the most part, that is, first half above 25%, second half likely a little bit below that. But it's mostly because we're going to be lapping a Q4 where you had shortages on the shelf last year, right? There just weren't eggs. So I don't think we're going to have the opportunity to get bought as well as we did in the fourth quarter because some competitors aren't on the shelf, right? Those blank shelves won't be there next year. So that'll make the comparison a little bit more difficult. But for the most part, we see great demand currently. And the pricing that's happened below us hasn't truly impacted our ability to do business or our volumes to this point.
Okay, great. So let's get into some more kind of general questions. And so you talked about the great growth that you've seen right in top line over the last several years. Can you talk about really the drivers behind that? What's going to continue to drive that growth right as we go forward, and what are you excited about for the future?
Yeah, definitely. Great question. So look, we're a premium company, premium brand. We've done a significant level of distribution gains over the past 4 or 5 years. Like we're available in over 22,000 stores in the US. And so we've done a good job, and if we've done our jobs correctly, right, we're in most of the stores we're supposed to be in, right? So where do we go from here? We have a significant opportunity to expand distribution in the stores that we're in, right? So if you think about it, we have some stores in kind of specialty natural channel retail where we have double-digit SKUs on the shelf. And if I look at other, more traditional grocers, or even someone that's like a mass merchant like a Target, we only have 3 or 4 SKUs on shelf. So adding SKUs to the stores that we're already in can provide, hundreds of millions of dollars of opportunity in terms of net revenue from here. If you think about it, we talked about it publicly, right? We are in 10.5 million households in the United States, right? They call it 130 million in total. Of those 130 million, 98% of those houses buy eggs every year. So we have a, kind of a mid-single digit share of the market. And we think there's significant opportunity to continue to grow the number of households that are buying Vital Farms products as we increase our awareness and people learn about the brand and understand what we offer. So we're pretty bullish on the opportunity for net revenue to continue to really grow here, given the opportunity we have to get more SKUs in stores and get in front of more consumers and give them the opportunity to try us out.
So let's shift gears a little bit, talk about supply chain. You touched on it a little bit, bit of moat for you guys. Obviously you still have capacity left at the one facility that you recently opened, but you're already now investing right into another. And so talk about kind of the thoughts behind that and what you've been able to do to manage your operating environment.
Right. No, that's a good question and a good point to bring up. So yeah, we currently have a facility in Springfield, Missouri. We call it Egg Central Station. It's where we process and pack all of our eggs. It currently has the ability to, support a $700 million plus net revenue egg business. We expanded the facility and opened it last year in 2022. So it's doing really well. But there's still significant room there for, the near-term growth potential we have. What we're thinking about though is, what do we do about once we get past 700 million? As a company, we're one that prides ourselves on not having supply chain bottlenecks, right? We didn't have supply chain bottlenecks through COVID. We've done a great job of managing through kind of this last inflationary period. So we generally are looking for the site for the next ECS, and that's something we'll probably do in 2023. And from there, it probably will take a couple years to build the facility, but we should have it ready to go for when we need the capacity, potentially above that $700 million mark I just talked about.
Yeah, and I'm sure you can't disclose it at this point, but I imagine the facility is probably going to be pretty far away from the current one. Can you share any kind of information on possibly would it be on the West Coast or still kind of in the pasture belt area?
So, we're looking at a couple of sites. I think the debate is, does it go to one kind of half of the country or the other, or does it stay in kind of a central location where the farms are? And that's the kind of debate we're having right now.
Okay. All right. So let's go back to the farmers, right? Because obviously that is a key piece of strategy, and the contracts that you have with them. Can you talk about how you set that up, the number that you have today, how you've grown that, and how you plan to grow that number as you go forward?
Yep, sure. So generally, we have over 300 small family farms that we work with now, and they are on various contracts. When someone comes to us, generally, we don't really do a lot of farm marketing. It's a word of mouth thing. We're known in the community, and we, have people knock on the door and say, hey, I've heard from my friend that you guys are a great operator. I'd like to work with you. How does it work? So generally, they will provide, they need about 50 acres of land to do this. And so most of our farmers are actually doing some other type of farming, right? They're not just specifically egg farmers. They're not egg farmers that are kind of changing the way they do things. We generally new farmers and teach them to do things our way. Once we go through and we look at their land and make sure that they have everything we need, the farmers are required to get financing, right? So they will build a barn to our specifications. The barns and the working capital for such is well over $1 million. So they will, be on the hook for their own operations, right? We basically set them up to succeed. We want to pay them and get them a fair return on their eggs so that they have a cash flow business that is steady. It generally takes us 8 to 12 months to get a farmer into the network. Once they're in the network, the contract they sign initially is for 3 flocks, and a flock lasts, call it a year and a half of egg producing capability. So that first contract they sign is about 4.5 years. Each renewal is just a 1 flock renewal. Each flock is 20,000 birds. And so essentially,
next question.
What's that?
How many are in a flock, which is 20,000.
20,000 birds, right? So there's 20,000 birds per barn. Some farms have 2 barns, but most of them have 1 single barn. We pay them a price for the eggs based on weight, and they buy the feed. They're essentially running their own operation. It's their capital, but we are contractually obligated to buy every single egg they produce. We have the pricing power at retail. They don't. So their price is, based on the weight of the eggs. We also true them up every quarter for what's happening with feed costs. So as you can imagine, lately the eggs from our perspective have been a little bit more expensive, but we want the farmers to, again, maintain a fair return throughout times of inflation. And this past year we've increased the farmer pay, right? We took it up in the fourth quarter. It's going to be in place for all 2023. That's in our guidance. But again, it's about, providing the farmer the opportunity and making sure our supply chain is resilient even during times of craziness with inflation. And so that's kind of how it works.
Okay, we got a question from the audience, and it's actually proposed to this topic. But how do you identify farms? And if you're a farmer or you have a family farm, how do you get in touch with Vital Farms to actually get into the program?
It's interesting. So I will get emails internally once in a while from farmers. They say, hey, I'm in Kansas. I'd like to, get hooked up with Vital Farms, and we send them to our grower support team, right? So that's the network that is doing a lot of the kind of inbound, I guess you could call it marketing / contracting, right, with the farmers. That they're the ones in the community, right? That's like we have grower support personnel all over the central United States, and so they have relationships with farmers in town. They have relationships with feed mills. A lot of it is, again, word of mouth. So they will hear, the grower support people will be out in the community and they'll hear so-and-so wants to come to Vital Farms. We do meetings, right, where it's like, hey, we are having a farmer meeting or we're having a grower meeting, and people are welcome to come to those. It's like an open house. Some of those are done, on an infrequent basis. It's maybe quarterly or half a year time that we do one of those, and people can come learn about Vital Farms and what we do. But it's a very low cost method of recruitment, and our brand and the way we treat people is paramount to them coming on board.
Okay, so going back to the business, you talked about the price increase that you guys took in January. You talked about it a little bit. It's important just to highlight it again and talk about how that's going to impact your business move through the year.
Sure. So we hadn't really taken pricing in many years, probably 4 or 5 years. We took a price increase on the broad portfolio last year in May. So some of that price increase is still flowing through. We took another one in January, which has gone into effect. We didn't have any pushback from retail. So essentially, if you think about our guidance, and we talked about, there's a significant benefit from pricing in Q1. The prices were both kind of a low double-digit dollar price increase, and we assume there'll be some elasticity which will come off of that number, and that's in our guidance. So essentially, we have taken price increase in January. We had one in May of last year. So the first half will be a little bit turbocharged, so to speak, from a revenue standpoint because of those price increases. And then, that will taper throughout the year. And, so far so good. I would say last year when we took the price increase, we had modeled multiple, possibilities for what the elasticities would do. And they kind of came in line with what we thought, right? We saw some elasticities. We did lose some volume.
I think where we were wrapping up, you were talking about the price increase. We'd gotten through that. And really the next kind of area was consumer, right? And that's definitely one of your competitive advantages. So you talk about, right, who the average consumer is for Vital Farms and how that differs from your competitors.
Yeah, I would say the one thing about our consumer that's a little bit different is we have a consumer that is making choices at the store and probably in other aspects of their life that reflect their values. And so if, they're concerned about the environment, or they're concerned about, the treatment of animals, or, what kind of packaging you're using, is it recyclable? those are the consumers that are drawn to Vital Farms because of the way we do things. And that consumer is honestly willing to spend a little bit more on everything if you are aligned with their values. And so that's the core consumer that we've attracted. I think that we will continue to see that type of consumer grow in the US. And that's kind of what we've seen in our data and the studies we've done on our consumer and other potential consumers, is like those aspects are more important to younger consumers and now even older consumers, right? Like I remember when I was, in my 20s, I wasn't really buying a product because I'm concerned about how it impacts the environment, but that has completely changed. And I think there's a younger demographic that is much more focused on that. Our consumers, just in terms of some statistics, right? They are, between 25 and 65, the household income is over 60,000 a year. We have about 19 million there are about 19 million of these households with some of these specific characteristics that we've targeted initially. We do think that this will grow, and we believe there's an opportunity beyond that 19 million households that's quite significant. But for the most part, it's a college educated working consumer that tends to spend a little bit more when they believe their values are aligned with the product itself.
Makes sense.
And as for your next question, which is probably what do you see now from consumers and how are the consumers currently behaving, we haven't really seen any impact. We'll report Q1 in May, so I can't really talk about that. But throughout last year, we really didn't see any impact. I know we've heard things in the news about the consumer might be softening. Are we going into a recession? I do think that discretionary products kind of get hit before stuff that's more consumable, groceries, et cetera. And so we'll see if that plays out again, like as in times of economic strife. But, for the most part, we believe we're really well positioned, right? What happened in the last recession was you had some trade down, right? But you also had people trade away from restaurants and eat more at home, which would help us. And, we're a cheap source of protein, right? So if you want to maybe not buy steak, you could still get a lot of great protein through eggs, which are much cheaper kind of per item option. So we'll see. But so far we haven't seen anything. And, the world's been wild the last few years, so you never know. But, so far so good.
Okay. And then switching gears a little bit, on the M&A front, is there anything in the pipeline? Obviously, you guys are investing a lot, right, into the capacity and the distribution. But is there anything from that perspective, anything from the new product front? I know there's been some talk about it, and, it's been kind of delayed a little bit, but anything you can say there would be great.
Yeah, no. So we told investors that we were working on having a new product and going into a new category in 2023. We're still working on it. Hopefully we'll have some news to share soon. We said it would be either in the poultry category or the dairy category. We haven't disclosed to investors what category it is. We know what it is. We've known for months and we've been working on it. So all I can say is we're very excited to talk about it, and more to come soon.
I'm excited to see what it's going to be. So that just came in, and you may have talked on this before, but this is actually a practical one where someone wants to know, where they can find your products. And then from a revenue perspective, along the same lines, have you seen anything different from a geographical perspective?
I'll take the second one first. So in terms of the geographic perspective, we have had the greatest growth in last year in the Northeast. We're pretty well penetrated across the U.S., very well penetrated on the West Coast, and in Texas, given we're based in Austin, pretty well penetrated in the Southeast. But the Northeast is where we have a significant opportunity. The Midwest, we have a significant opportunity, and we've seen a lot of growth in those regions, with more to come. I think I grew up in the Midwest, and there are stores where I go to there that didn't have the products 2 years ago, and now they're getting the products. So we're starting to get some real nice growth in those areas. But the Northeast is probably the one that's a little underpenetrated for some of the retail investors that are probably on this call, right? It's always kind of funny that the New York investor base is, where can I get it? Where can I get it? Look, we're on Amazon all over the place. You can find us there, and you should be able to find us at most of your local stores. We're in Target, we're in Whole Foods, Kroger, any major kind of supermarket banner you can think of, we should be located in. You should be able to find us there.
Oh, well, perfect. We're actually coming to the bottom of the hour. And so, Matt, I'm going to turn it over to you for any kind of closing comments, and we'll wrap it up.
No, I just want to say thanks again for the opportunity. Look, we're growing. We're going to have improved returns and improved margins this year, and I think it's a great time to get involved with Vital Farms. We're probably going to have hopefully we're going to have some new category announcements coming up soon. So there should be a lot of positive news flow out of our company over the next 6 to 12 months at least.
Well, appreciate having you guys again, and look forward to obviously continuing following the story. And for everybody that's staying tuned online, up next we have International Money Express that will start at 10 o'clock. Matt, Vital Farms, again, thank you for joining us, and we'll see you next time.